Okay, hello everybody, and welcome to our IBD Madison Heights Livonia meetup for March 2023. Tonight we'll have contributions from Raja, myself, Keith, Francisco, Taljit, Ron, and Cookie. As always, the information you see tonight, take it with a grain of salt. It's not a recommendation to buy. It's just a starting point for your own due diligence. Market status as of Sunday. So this presentation was prepared over the weekend, so it doesn't include Monday's action. But as of that, over the weekend, we had a market in correction. So our last meeting was February 20, that weekend right there, the 20th. We were green for quite a while. Then we went to caution. We turned green for about a week, and now we've been in a solid red for about a week and a day. So that's where we are. The IBD 6,000 accumulation distribution, the buckets, the 5 buckets, A, B, C, D. We're shifting farther into a correction. We are in a correction, but now the number of A's, notice they went from 1,100 to 427, and the E's have gone from 337 all the way up to 956. So it's pretty much flip-flopped, and I don't know if it's done yet. I don't think it is done yet, but we'll see. Time will tell. Our Dow Jones Industrial Average, 320. So we're moving through all lines, meaning the 15 or the 10-day, the 21-day, the 50-day, and the 200-day. The black line is the 200-day. Now it's we're pretty much living below the 200-day on elevated volume. So that volume is high. Pretty much, I mean, it's higher than you're going to see on the whole chart there. The high spikes are options expiration days, so that's to be expected, but it's elevated volume for sure. The relative strength line is fading. I'd call that about a 5 o'clock position on a clock, face of a clock. So it's not looking very good. S&P 500 looks a little better, but even though it's all down below the 200-day, same story, elevated volume, which is not negative volume, which is not what you want to see. And it's hopefully it pops through the 200 soon. But I mean, you can see it can go through, and it can live below the 200-day for quite a while, or it can just hang around there for a while, but it's below it, so it's not what you want to see. NASDAQ is the leader currently. It seems like all the lines are converging together, and the volume it's not really that bad, other than this was Friday, which was a triple witching options expiration day. So it seems to be clustering. It's probably the best looking chart of the bunch, even though it's heading in the wrong direction. Notice the relative strength line. I'll call that a 2 o'clock position. It looks to be, it is much more, it's much positive, much better of the bunch. A blow up of that, just so you could see, it is definitely above the 200-day and the 50-day and all the lines, actually. I mean, it's up there. And this was Friday's chart, so Uh, it was down, but it wasn't down. It wasn't down as bad. So we'll see. Here's our stock charts relative rotation graph. So this is the S&P, all the stocks is broken by their indexes, and it also includes the UUP, which is the dollar. So this was last month's. You can see everything was pretty much fallen. Notice how it goes in a clockwise fashion, usually. That's just what I've observed. And notice the XLC, XLY last month, how it's kind of XLC is now leading, which is the communications sector, and XLK, it was kind of rising. So it's just a different view of it all. And a lot of stuff is sinking fast, but that would be our leaders right there. Communications, technology, consumer discretionary, and real estate. So that's according to stock charts. Julius D. Campanera. Very interesting. If you get a chance to see some of his YouTube videos, he's very interesting. So he created this Excel chart. And this is okay. So this is last month's meeting, our IBD meeting right here. Oh, this is updated. I didn't update the January, but it is February. We did not have a very good month. Our biggest winner was the lithium, SGML. I believe Tesla was rumored to be buying it or something like that, but regardless, it's a EV play on lithium. Then we had a 1% winner, Shockwave, HubSpot, and Southern Copper. That was our top, and these were losers here, so not a good month. So right into it. Here's cookies stocks for this month. This is our current month. We have Pod Insulet. Let's see. That is a medical products. That's the IBD 197 subgroups. 36 of 197. So it's in a top group. Nice flat base. Very nice flat base. It's actually in another within another base. That looks like a cup with a hand or a double bottom. This is a double bottom here. Big long double bottom. Nice tight price action above all the lines. So 250-day, 21 and 10. So it's right at looks like the 21 or the 21 day. Nice tame volume, actually big blue bars, so that's exactly what you want to see. And 92 relative strength, nice gap up, and it's really not violated that gap up maybe until recently, but it's pretty good looking stock there. Pod Insulet. Let's see. Here's their earnings per share. Actually, let's see. So they develop wireless handheld insulin infusion systems for people with insulin-dependent diabetes. So it's a diabetes, which is a very, I think it's our number 2 nationally negative disease. But regardless, this year supposed to be earnings per share up 7%. Next year, 52%. Up down volume 2.4, which is outstanding, very good. R&D almost 14%. Let's see. SMR rating B. Accumulation distribution C plus, middle of the road. Composite rating 96. A, let's see, return on equity 18%. PE 233. So it's not cheap, but it's a top stock for sure. And let's see, A plus funds, there are several that own it, so might be something you want to keep your eye on for sure. Okay, another one from Cookie. We have TPH, Tri-Point Homes. So with the interest rates rising, you might think, homes, what? Well, FYI, building residential commercial, number 3 of 197. So this is definitely leading the all the stocks in the universe that we follow. Homes, believe it or not, our home builders are leading the pack. Nice long cup with a handle, first stage, and it's hanging out right at the buy point. 24.17. Not, I mean, a really nice tight price action. One big bar day, price bar day, that might have been earnings, I don't know. Oh, actually, that was the price breakout. So it popped up a few dollars, but notice it closed down. Well, not down, but at the low end of the daily range. Nice volume on the breakout, 177%, which is outstanding for a breakout, and 95 relative strength. So it's a top stock in a top group at the top. According to IBD, it's at the right time. So might be worth attention on your list. Fundamentally, so this year, earnings per share are projected to be down 49%. 2024, up 21%. Up-down volume, a measure of supply-demand, 1.4, which is good. Let's see what else we got here. Accumulation distribution B plus, so it's leading the market. One thing to note, relative return on equity 22%, PE 4, so that's definitely I call it a Warren Buffett type stock. He likes some high profitability, not too expensive. So this is even better than the oils right now. But these home builders might be something you want to watch. And let's see. No A plus funds. However, there are a number of funds that own it. 49% depth, so that's not really out of line. I would assume they'd buy property to build their next projects on, so that's not too far out of line. Might be something you want to keep your eye on, though. But SMR rating B, accumulation distribution B plus, it's all top notch ratings fundamentally. Another one from Cookie. This is FOUR, that's the symbol, shift for payments. So this one here is let's see, it provides integrated payment processing and technology solutions in the U.S. So I believe it's a payment, credit card payment type system. Finance, credit card payment, yeah, that's the name of the group. Okay, 82 of 197. So notice how it's nice pattern. Third quarter of last year, and it just rose up, nice orderly fashion, above the 50-day and the 200-day. It's coming down to the 50-day, and it's up above it again. So really, it looks like the volume is increased. I would say the last 3 or 4 months over the prior time period. Overall, it looks to be pretty much blue bars. So relative strength 97. I mean, it looks, all things considered, last week, I mean, this is pretty tame. It looks pretty interesting. Nice gap up. It come down below the 50-day, hung out about a week, then it gapped up. Might have been earnings, I don't know. Looks like possibly earnings. Big blue volume, and then it hasn't come back yet. So that's looking pretty strong. Fundamentally, it's very strong. I mean, the earnings, look at the earnings there. 51% increase this year, 45% next year. So, I mean, that's almost 100% over 2 years. Up down volume 1-1, that's respectable. Accumulation distribution, SMR rating A, B, composite rating 99. That's all top of the line right there. Return on equity 38, PE 50. That's, it's not real expensive. 500% debt. I don't know if that's out of line for them or not, but there is an A+ fund that owns this. Let's see, Lord Abbott Development, and they did not own it 1 year ago, and they do own it now, and it looks like they're increasing their ownership or their position. So might be something to look at on your list. Another one from Cookie. So this is Monolithic Power Systems, MPWR, designs analog and mixed signal ICs used in DC converters, LE drivers, LE backlight inverters. So what does all that mean? That's electronics, semiconductor fabless. So this is this number 2 of 197. So this is definitely leading the pack. This is, I'm not saying they're a chip builder, but they, if you make chips, they can help you make them faster, cheaper, and better. And this is definitely, chips are where the action is right now. Nice long cup with a handle. It's still in the handle. 8% to the pivot. Again, this is Friday's data, but 93 relative strength. I mean, it had a nice gap up here. Looks like possible earnings, and it's forming its handle, coming down in the handle. Nice low volume is what you want to see in the handle. And I don't know I guess if you added those up, it looks to be more blue than red, and the red is lower than the blue. So I would say this is really a nice looking chart here. Really nice looking cup with a handle. Seems to be above the, the 200, the 50, and right around the 21 and 10 days. So it's something you might want to look at. It looking really nice. 8%, 8% to the pivot. So it's not overextended. fundamentally, so 20% down from 2022. However, next year they're supposed to go up 29%. So actually, on the chip business, FYI, that is our front page IBD article this week. A very good article. It separates the alleged winners from losers, but it's worth reading. So, and they're positively mentioned, but yield 0.8%, up down volume 1.4, return on equity 41, PE 40. Other fundamentals, SMR A, accumulation distribution A, B minus, composite 99. So this is definitely something you might want to take a look at. Some of the chips are like NVIDIA, they're way gone. I mean, they've had great runs. And this here, so notice they have nearly 1,700 funds, of which they have several A plus funds. American Century, T. Rowe Price, Franklin, Fidelity Contra Fund. So they have, I mean, it's a widely owned company. Let's see. And I think one more from Cookie. We have SNPS, Synopsis, which is 26 of 197 IBD subgroups, which is computer software design. So that's kind of where you want to be. So this is that. This has got the cup with a handle, and then if you notice, well, cup with a handle, it's at the pivot, poking around, trying to advance. But notice to the left here, we got this long base, which is base, gap, base. So this is really powerful setup. To me, it's a really powerful setup. You got pattern, gap, pattern, horizontal, not too extended. So it's just setting up, and 2% from the pivot. It's setting up. I heard IBD's David Ryan describe this condition where you see base on base and a gap in the middle. As he said, if you had, imagine you're in a swimming pool and you have two beach balls and you're trying to push them underwater, and the water's pushing them up. So that's how he described it. It's very powerful whenever you see that. So who knows, maybe that's something to see. But notice I mean, there's red, negative red. That's true, but I don't know. I see a lot of blue too, though. So this is, I like this. Something you might want to take a look at. And fundamentally on this one, we got down this year 19%, up next year 17%. Let's see. Up down volume 1.3, return on equity 26, PE 41. It's not really outrageously expensive. And there are 2,700 funds, of which there are several A plus funds. So JP Morgan, Franklin, MSF, or MFS. So that might be something you want to look at. 33% R&D. So they're it's a big company, good company. Okay, now on to my stocks. So this was one of Cookie's last month, but I tell you, this is a nice looking stock. Big cup with a handle. The breakout day 241%. So it did break out on really strong volume, even though it hasn't really gone anywhere. But it seems to be low volume in the handle. So and it's above the 250 day. I mean, this is according to this here, it's 1% below the pivot, so it's still not out of buy range. And so fundamentally, I was looking at this, and this is what drew my attention. This year, 46% earnings per share increase. Next year, 24% earnings per share increase. Actually, it's 14 of 197 IBD subgroups. Computer software, specialty enterprises. So they, let's see, develop a cloud-based platform that enables businesses to deliver inbound marketing and sales experience. So I'm not sure what that means, but it has something to do with computer software, and it sounds like they're for marketing to businesses. You know, businesses need it. So I mean, it's a big company. I've heard of it before, but I've never really looked at it this closely. Up down volume 1.4, SMR, accumulation distribution, composite, all top notch, B pluses, B, A, PE 144. So that is expensive. Return on equity 15. It's not a cheap stock, but it's something you might want to look at. The thing that I like is the earnings per share increases, the number of funds, and there are a lot of A plus funds that own it. So T Rowe, there's a lot of them. So this was from last month, cookies from last month, but I liked it, so I picked it. And here's another one that I kind of like. This is a Mobileye. Let's see. They were from last week's or the prior week's front page cover story of IBD. They were within that, and they have to do with let's see, subgroup number 2 of 197, electric semiconductor fabless. They have to do with the article was self-driving semi trucks, and so they're like the leader in the technology in that segment. So if you want to have your semi truck driven automatically, they're the ones that'll get you there. It's a wild stock. So I mean, the price bars are very big. However, it's 97 relative strength. It seems to be moving in the right direction. I want to say it's an IBD 50. It's on their list. Probably wait for a pullback if you can, but who knows? So they have no earnings. Next year, they're supposed to earn 84 cents, but that's just an estimate. Up-down volume 1.5, 279 funds, so it's a new issue for sure, which is higher risk, but it's in the same group as NVIDIA and these others. Lattice Semi, return on equity 4%, so they're not, I mean, they're more research now. R&D 42%, so that's what they're spending their cash on. They do have they do have A plus fund. So that's on these IPOs. That's my if you see an A plus fund, then that's kind of like a screen that, well, somebody owns it. Somebody's looked at it much smarter than me. Even though all spring growth, I never really heard of that one, but it's an A plus fund. So this might be something you want to keep your eye on. Earnings per share fund or earnings per share growth rate 85%. Okay, here's another one I was looking at. Airbnb. Everybody knows that, right? So this has got a nice cup with a handle. Breakout, big breakout, even though it's coming back down to the 50-day. Relative strength 88. Let's see. Subgroup 10 of 197, leisure, travel booking, operates an online marketplace for travel information and booking services worldwide. So they're kind of like the eBay of that type of thing, all with the automation, and you can rent your house out to them. But anyways, it seems to be really above the 50-day. The 50-day just crossed the 200-day, and the other lines they're trending down. But it's not looking too bad. And this year, notice 55% earnings per share increase. Next year, 17%. Up down volume 1.6. Return on equity 37. PE 43. It's not too out of whack, even though that's not what Warren Buffett would like to see. SMR, accumulation distribution, composite rating, all very good. A minus, 98. Let's see. There are several funds that own it. I mean, this is a very widely held stock. 1,700 funds, of which there are several A plus, including Fidelity Contra Fund, Harbor Springs, JP Morgan, Franklin Growth. So that might be something you want to see. Debt 36, not too bad. R&D 18%. Okay. Okay, another one from me. Let's see. AEHR. They are number 1 of 197, electronic semiconductor equipment. So semiconductors, they've been really tearing it up lately. But it's riding the 50-day. It came through the 50-day here, beginning of the year, but then the chips they've really been on a tear. And now it seems to be fading into the 50-day. 99 relative strength. I'd call that mixed with high red bar there for sure. I'm not sure what that was. That might have been earnings. Who knows? That article on the chips on this past week's paper, I recommend it. It's very good. Actually, the article is, they're saying we may be too soon on this chip rush, but read the article and get what you get out of it, because they're saying it's not over yet. The decline is not over yet, but they are for sure their number one group. Let's see. And however, not all the chips are losers, but so especially this one here. Earnings per share this year, 43% increase. Next year, 83% increase. Return on equity, 37%. PE ratio, 57. So this is maybe something you want to keep an eye on. A plus funds, 0. So no A plus funds own this, and only 96 funds own it. Even though that's almost double from a year ago, but this is a smaller company. And let's see, finally on our stocks, we have TG, Target Hospitality, which is, let's see, 57 of 197. Leisure Lodging provides specialty rental accommodations with catering and value-added hospitality services in the U.S. So this here is 98, even though it's fading, heading in the wrong direction, but it's still 98. It's above the 200. Looks like it's dancing around the 50-day. The 21 and 10-day is below the 50, so that's not ideal. But it's 98 is 98. 12% to the pivot, so it's right at the midpoint within this pattern here. And we got a cup with a handle here, so this is not exactly horizontal, but it's cup with a handle, gap, big gap, and then another pattern here. So that's what drew me to this. And then fundamentally, and the blue dot. And let's see. So this year we have 137% earnings per share increase. Return on equity 50%, PE ratio 22. So that's I'm going to call that a Warren Buffett. He likes to see this the PE less than the return on equity. So that's what he's looking for. One of his many traits. SMRA, accumulation distribution B plus, composite rating 99. So that's right there. Notice no A plus funds though. So this would be a small cap for sure. And I think that's it for our stocks. Oh, here's our yield curve. So this was, if you find yourself looking, or I found myself looking for alternative investments in bonds, maybe because bonds are so high. And this was last month, the yield curve. What this is you got the yield, you got the time down here, 1 month, 3 months, 6 months, all the way up to 30 years. This is right off of our government's site. And you can see how 3.84 all the way up to around about 5%. This was last month. And this green box here is where I bought a few of them and I'm just letting them roll over. I'm experimenting is what I'm doing. But so around about 5% last month. This month, fast forward, notice the rate has gapped down. So they are coming down slightly. So this is 136. Now it's less than 5%, but everything is still, it's pretty high from recently. The last couple of years. The last couple of years it was negative. And now they're actually paying a yield. So let's see. That's it. Oh, well, okay. So here's a screenshot of these are my actual trades. I just bought a few $1,000s, but just so these are how they do these notes. I've never bought one of these before, but these are the notes. And they sell them at a discount. So when you buy it, notice how the interest is calculated in. So you're actually paying $1,000 or actually $2,000 minus the interest. So then when it matures, they pay you the whole thing. But this is just an experiment for me, but I just thought I'd share this with you. It's kind of interesting, but these, and notice, so this is Schwab, and notice there is zero cost. They don't charge a dime for this. And I mean, it's just out there. They make it pretty easy to buy these if you want them. It's just an option. And I just let them roll automatically. So once you set them up, they're kind of like automatic. And, you know, this is our flow chart, if you will. Buy your stocks, follow the IBD market direction. So we're in a correction now. So pretty stringent criteria to buy a stock. Track distribution days, buy the best stocks. Hopefully that's what we've seen here tonight. Buy at proper buy points and take profits regularly. And that's it for March.
Let's put our hands together. Good job. Good job.
Okay.